If you're suffering from a mountain of credit card debt, I want to help you get debt free. My name is Mike Mellace. I'm a certified public accountant with Pink Harbor CPA, and I want you to no longer be beholden to the evil empire of the credit card companies. We're going to help each other out. I'm going to help you get debt free from these credit cards, and you're going to smash that like button and subscribe to this channel. Number one, I need you to make a commitment to yourself that as you pay off these credit cards, you're not going to use them again unless something completely catastrophic happens. Catastrophic does not mean you want to go take a vacation. It does not mean you want to buy yourself a present as a reward for doing so well paying down your credit cards. It means you lose your job. It means your car gets into an accident and you need to make emergency repairs. It means you have a medical situation you have to pay for. Does not mean anything pleasure related. Number two, accept the fact of how the system works. The system works that the credit card companies do not want you to pay off the credit cards. You have to accept that and use that as fuel. They want to make sure you stay indebted. Make that fuel, your energy to pay these things off and never be a victim of the credit card companies again, who will charge you outrageous interest rates. Next, I need you to understand the 25% utilization rules. So first, any credit card that you have right now, we never want to utilize more than 25%. So if you have a $10,000 credit limit on a card, we don't want to charge more than $2,500 on that card. Secondly, let's say we add up all of our credit cards combined. Our combined credit limit is $100,000. We do not want to use more than $25,000 in total credit card debt amongst all the cards. Reason why is the credit scoring models will ding you incredibly for having more than 25% loan on a card and more than 25% overall. So we need to be mindful of that. The next thing is we want to make an inventory of all of our credit cards. So by making an inventory, this is creating a spreadsheet. Now, you could use a big piece of paper and write everything out. You could use Google Sheets, do it for free. You could use Excel. This is what you want your spreadsheet to look like. Column 1, we want the credit card name. Column 2, we want the interest rate. Column 3, we want the credit limit. Column 4, we want the balance owed. Column 5, we want the available balance. The available balance is the credit limit minus the balance owed. And finally, in the last column, we want to determine the percent utilized of that card. And the way we get the percent utilized of that card is the balance owed divided by the credit limit will give us the percentage utilized. Remember, we want 25% or less per card and 25% less overall. This helps us set our goals to help us know what cards we're going to pay down and when we're going to pay them down. Now, using that spreadsheet, you're going to identify the cards that we're going to pay down in that 25% rule. So now, we might have a card that is at 32% interest rate, and we owe that card 15%, and another card we have owed that's 30% interest rate, so just slightly lower, but it's that card has on it 47% utilization. We need to get your credit score improved in the credit scoring model. So we want to get everything down to below 25% if the interest rates are all relatively pretty close to each other. The next thing, we want to look and see if there's any 0% APR rates that we have available to us right now. If you have offers right now 0%, we want to utilize them to pay down interest rates on a card right now. Now, we're going to pay down those credit cards with high interest rates using the 0% card, but be mindful we have to pay off the 0% card too as well. But we're already making those minimum payments on those cards, even if we're struggling really hard. We're going to take those same minimum payments, putting the 0% card, but do the 0% shuffle. Next thing, I need you to create money. How are we going to create money? Not like Harry Houdini. We're not magicians. What we're going to do is we're going to look at our savings account first. Do we have money in our savings accounts that we can use? So Ideally, I want everyone to have 2 to 3 months in an emergency reserve account, but that's not feasible right now, maybe. Right now, maybe you have 10 weeks, 12 weeks worth of money inside that emergency reserve account. We want to use that money to pay down your credit card debts. So maybe we're going to keep 2 to 3 weeks in there, and the rest we're going to use to pay down our credit card debts. If something happens, it's catastrophic, like I mentioned, catastrophic, use then your credit card for that. But right now, we need to pay down these credit cards. Secondly, any investments that we have, take into consideration tax implications if there's any investments that you got to cash in. But our investments most likely are not making you 30% what these credit card companies are charging you. So any investments that you have, we want to cash in some of those investments, pay down the credit card companies, pay down that credit card debt, right? So in doing so, you're now getting yourself more financial freedom, and you're actually making money because maybe that investment was making you 10%, but the credit card is charging you 30%. It's like you just gained 20% every month in investment. You just invested in yourself in some way. Next, I want you to cancel any unneeded subscriptions. So use something like Rocket Money. They got a great app and a website. I'm not endorsing them at all, or I'm not an affiliate with them, but I use them to go and look and see, well, like, what am I paying for? 6 months has passed by that I'm not even realizing I'm still paying for subscriptions for that I never canceled. Cancel them. Use that excess money from those subscription cancellations to pay down your credit cards. Sell things you don't need. Whatever you have laying around the house that you don't need, get rid of. Use that money to go pay down your credit cards. You'll probably feel a lot mentally clearer too, not looking at a whole bunch of junk around. And the last thing is to borrow, not withdraw, but to borrow from a retirement plan. Because when we withdraw, we have a penalty for early withdrawal we got to pay. We have taxes we have to pay. But when we borrow, we don't have any of that. So borrow from that to pay down your credit cards. You're going to pay interest on that. That is a loan. And you typically do loans over 5 years, these 401k loans. But you're paying that interest primarily back to yourself. Okay? The next thing is, remember that 0% APR, maybe earlier in the step, before we started paying things down and our credit score wasn't right where it should be at. We couldn't get 0% APR financing offers. But now, as you start to pay down these credit cards, the credit card companies don't want you to be out of debt, but they also don't want you to be out of debt completely. So they know what's going on. They'll start sending you 0% APR offers. Take them 0%, but you still have to make payments just like you would have as if you were making all your minimum payments, because we want to get debt-free as quickly as possible. And lastly, call the credit card companies and ask them to lower their interest rates. You're going to have a much better shot of this as your credit scores improve from the low interest rates. Why? Because they know your credit score is increasing and you don't need them as much anymore. So that increases their motivation to lower down your rate. Don't worry if it's 30% down to 25%. 5% is 5%. That's great. Probably more than you making in any savings accounts, 5%, right? So take whatever you can get. My name's Mike Mellace with Pink Harbor CPA. I want you to be credit card debt free. If you need your taxes done, if you're having tax problems with the IRS, you have a business and you need accounting and advisory services, please give me a call at 856-226-9524 or check me out on the web at pinkharbor.com. Don't forget to like and subscribe to this channel.